The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
And why do I play that? So everybody knows, there's no question about it, because some people listen to this later, that I'm dealing with the information I have at the time. Predicting the future is a tough business. Much more if no one knows when you actually said something that you said or didn't say. But you never know. S&P is off about a point. The Dow's up about 12. We look at the NASDAQ off 37 and the Russell's off 7. I was looking for some kind of pullback between now and Monday that was fairly significant. And mostly just had to do with overbought conditions in most all of the sectors. And so that we got this kind of turned down. I wasn't really surprised. I started to see maybe some of the dark cloud dark clouds getting ready to cover the market last few days. I thought a few people would probably try to back out. Now, am I a bear here? And the answer is no. I suspect that we're going to get these few down days in between Monday when we start fund buying, where a bunch of cash comes in. I think we're going to have enough people probably get short to get squeezed out fairly quickly. If my view changes, I'll let you know. But for the moment, we've had fairly light pullbacks in the market in most sectors. And those mild pullbacks have been with huge moves lower in the number of 9-day moving averages, which kind of confirms the dissonance, kind of confirms that there wasn't a lot of energy for those pullbacks. We're probably going to get a few more. The semis were, of course, the most tired of all. I love you most of all, Scarecrow. The semis, I love you most of all, is the ones, just you're going to get some pullback out here. You had some big pushes, and it's kind of hard to get too excited about what is, at this moment, a fairly benign pullback. But to me, it was just especially the extensive selling of calls on late Monday and Tuesday. It kind of showed me that everybody was just a little bit too much bullish. And that's why we'll go through the slide here for what I actually said, which we'll do in a minute. Other than that, volume's been good, so there's no real sign of a high in these markets. We've got a good market volume today, a little bit more than we've had the last 2 days, but nothing so outrageous. What do we got? We're at 13 points higher than the low of day on the S&P. So we wiped out a lot of upside and downside today. I still suspect that we could see a little bit more pullback on Thursdays and Friday. We'll talk about that and how it could come and set up for fund buying starting on Monday. But that's it. Now, of course, I'm going to start seeing, I suspect, this TLT taking a run down to the 116 level. We're at 122.93. I think that's the next shoe to drop in the market, so we'll keep an eye on that. Got a few other things happening, which we'll talk about today. And that's about it. Let's go ahead and get our history out of the day. And it is very much apropos for a day where gold and silver glitters.
Then it's all just a little bit of history repeating.
On this day in 1848, a millwright named James Marshall discovers gold along the banks of Sutter's Creek in California, forever changing the course of history in the American West. In the 1840s, Sutter's Fort became the first stopping off point for overland American immigrants coming to the California to build farms and ranches. Though sworn to protect the Mexican province from falling under the control of the number of Americans, Sutter recognized his future wealth and influence lay with these settlers. And with the outbreak of the Mexican War in 1846, he threw his support to the Americans, who emerged victorious in the fall of 1847. And of course, he tried to keep this quiet for about 6 months. But people started to blab, and within the 6 months following that, there was some 50,000 people descending on that area going after the gold. And then, of course, through the next 50 years, all the way up through Alaska, and starting the big gold rush. Not to be confused with the gold rush today. What's the last quote on Mr. Goldilocks out here? 1359.70, as I said, on December 10th or 12th. I'll have to go back and look at that. I was long gold and not going to be trading in and out of it. To me, this is the last big wave in gold. It can last years. And the easiest way to screw up is to, at least in my opinion, is to be constantly trying to chase these stocks in and out, or the metal itself. I suspect I'm going to make a lot more money sitting on my hands than trying to guess the daily or hourly move in gold. As Jesse Livermore said, kind of like trying to tell what day it is by watching the second hand on your watch. Unless things vastly change, I think slow and steady wins the race for precious metals for a while. Also have a nice little pop in oil up to 65.29 on the last tick out here. Natural gas pretty much hanging out at $3.51.8 cents. Copper's up 11 cents today. A lot of that leaking really started to help the old Dow stocks, the brick and mortars, and the ones that make the brick and mortars. And we continue to see what I suspect is a lot of sector rotation and some nervousness going into what I suspect will be another government shutdown February 8th. If you missed the news, the minority leader of the Senate's House was surrounded last night, and screams and death threats abounded. That kind of put a pale, I think, on a lot of the market when that news did hit this morning. But we'll continue to keep an eye on that. But there may be, I guess we're already into the election of 2020, and a handful of people are going to be throwing some Molotov cocktails around. The market may or may not pay a lot of attention to it. I suspect we had a few features, one of those being that today that kind of put a little reversal in the market. That reversal changes, I suspect, on Monday. We'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
In the path of least resistance this morning, I said this one sentence to end the newsletter. We still suspect we have a significant down day between now and Monday. I suspect this is part of it. We're probably going to get a little bit more of a taste of it, I suspect, tomorrow as we kind of go sideways, and maybe we'll find some kind of buy point in there. We may have already gotten it. The S&P's positive again. Kind of tough to keep a good market down, but I suspect that we're going to at least have a couple of sideways days. We'll see how some of these stocks react. I'd like to add for the move back up into fund buying either late tomorrow or late on Friday or Monday. So we'll see what happens with that. But I think we got at least a taste of that. Mark Benioff, who's the CEO of Salesforce, kind of throwing a little cloud over the tech market too at Davos today, compared the current crisis of trust facing the tech giants to the financial crisis a decade ago with the banks, urging regulators to wake up from the threat from Google, Facebook, and other dominant firms. Google actually lost one of its big engineers yesterday, and he threw his hands up and said the company was no longer fun to work at, and it was nothing but a big political mess of infighting. Well, you never know. Eventually, we'll all have our day. Maybe he's going to go start a new startup. We'll have something else to go out there and complain about. But from Google to Facebook to Twitter, these guys have been acting incredibly badly. And in the finest, what can you say? In the finest tradition of book burners, in maligning free speech. So not a surprise that some people don't like it. Whenever you find yourself on the side of the majority, it's always time to pause and reflect. And we'll get to a little charts out here starting right away. Come on. Where are you? Come on, Mr. Chart. There we are. I haven't looked at Google for a little while, so why don't we take a look at it and start it out. But kind of interesting. It's got a little, pretty much finding its high. You never know why people leave. There's a lot of reasons too. But man, if you were trying to get on the sell the top, leave, and exercise your options, maybe Google, this is a good time to do it. This certainly looks fairly close to the end of a expanded ABC up. Let's take a quick look at this and see what we got. Okay, at ABC on the 1-to-1 was 1163. We're at 1187. What is that? 1187. So 1 to 382 would be 1225. So you got a little bit farther up to go if you were going to actually get that. But kind of just a little spinning top out here. Let's take a look at some of these other social networks. TWTR, who is, man, if you watch those videos of the engineers speaking last week, a sad day in America. But, yeah, this thing kind of started down on those videos saying how they were molesting free speech. So what else do we have out here? This is back to this gap up that happened with 48 million shares. You got 35 million shares yesterday, 18 million shares. Probably going to find some kind of support here around the 23. And, of course, the reason why this thing's up, it's not better earnings or anything else. It's all about potentially someone buying them. And the question is, would Microsoft buy them? Don't think it does Facebook any good to do it. Probably be a restriction of trade lawsuit in that. Probably doesn't do a lot of people very much good. Might do Microsoft good, but I think Microsoft wants to stay out of the fray. They're in LinkedIn. LinkedIn is kind of agnostic when it comes to everything. People on their best behavior, trying to push what they have. Maybe that's the cleanest. I haven't heard anybody really complain about LinkedIn. Have you? Don't know. Maybe that's why the thing's doing so. Maybe that's why Microsoft is doing so well. I mean, you had a little kind of a pop out here, but certainly you got to $93.43 today. Volume's okay. Nothing too exciting. This, of course, in a big ABC, just the same. So let's do this. Let's say that this is the A. Do I got it here? Let's say that this one's the A, and this is the B. And we'll go back here for this thing, what it came down and tested the C. It gives us 95.62 for a 1-to-1 ABC, 101.32, which I suspect is really where this thing is going. That's the 1.382, 1-to-1 382. So 101.32 would be the expression of this big move. And one of the reasons why you can really think that this is still on the way up is that December 4th leg up to today has had even more energy than the leg going back to August 11th and up, finishing up on October 27th. So still fairly good. Oh, boy. Cigarette edition. Well, that is interesting. Okay. Mark Benioff said it's like cigarettes. Don't know. Not on, although I have a Facebook account, not on it. I have a LinkedIn account, not on it. Got a Twitter account, not on it. I think I had a very quick taste of it, and I've said it before. It just seems to bring out the worst narcissistic part of mine and other people's personality. And maybe that's what they're talking about, although I haven't heard anybody actually say narcissistic. But I think that's kind of what it is, isn't it? Maybe someone will call in, tell me whether or not this is the end of social media as we know it. Don't think it is, but could be. Okay, so let's go ahead. Got some emails here. Let's go ahead and get to them. in the inbox. Rob from South Carolina says, thanks for input yesterday on Texas Instruments. Sold out my position at 120. Also bought the February at the money 120 puts at $3.10. Sold those babies today at $8.40. Congratulations, Rob in South Carolina. I've got Rob, and now Bob wants to my look at GLD. And, of course, we're breaking above those levels. That level is the September 7th high. I said we would take, I thought there was a 90% chance we would take out at least a attempt to take out the September 7th 2017 high. That had 12 million shares. Got 8 million shares now on a gap up. A lot of this, I think, is going to come in. Probably see some shorting in the gold market, and those people probably fold by the end of the day. Again, I think we're probably going to see some consolidation moving around. Everybody will say what's wrong with gold, and it will slightly move up another 20 bucks in a couple of weeks, and it'll do that forever. Not forever, but for a while. At least that's my call. And always trying to chase the small stuff in gold, I think, the big money, is staying long and strong.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Question in the den was, what did I say about Texas Instruments yesterday? And I really would like to go back to the tape, but I'll give you the Reader's Digest version of this. And that is that most of these semis look like they could pop like this one, maybe $2 higher, or I thought this thing would go down to somewhere around 112 if things didn't go perfectly. And you got kind of that. The earnings was that bad? No, but these things are priced for perfection. And I thought that this thing was probably going to slide back down to 112. Even if things were great, I thought you had $2 higher. This gentleman had been long this thing for a while and had a lot of cash. I didn't think that $2 higher was worth the risk reward. And more than likely 112 was coming on this one, which is it's 111 or something right now. Got down to 108 earlier today. Just a lot of these stocks. When we covered Netflix on Monday before it, basically the same thing. Netflix was a very hard one to figure out. It could be $20 higher or $30 lower. So you may had a reason to go after Netflix, but you had really no information on how their international sales have gone. So I said that one was probably, a big outlier. The rest of these, they just look like they're going to probably have been a little bit too expensive going into earnings. The earnings are not going to be bad for the most part. They're just going to be kind of a little bit beyond. They're going to have their little pullbacks here. And then, of course, everybody's going to say, hey, it's a great time to buy, and they'll go after them all again. But semis are very, very tired. I'm not saying go short these things, but they are extremely tired. And that's when you get kind of surprises like this in TXN. But again, I need something like a 20 or 30% move. And I don't think this is the start of a 20 or 30% move. I think this is just a gap that's going to go sideways for a while. And then maybe even next week, we're going to start seeing that gap fill. If that gap fills on no volume, I'd be much more likely to short going into the 8th of February or thereabouts. So that answers that. Okay, what else do we have going on out here? Going to go through these earnings and movements, although I don't think there is a lot going on out here. These train companies have kind of come off their highs a little bit. Not a lot of movement for Norfolk Southern, but enough. But we've had, 3 of them now? They've all kind of trended lower through earnings and after it. So not a big surprise out there, not a big move. But these things kind of looking like they're pretty much fairly valued. What else did we have? ROK in the USA, Rockwell Automation, kind of slipping down the other way. Opened a little higher, kind of came back a little bit. 198.82 is the low out here. Just never really got the kind of juice it needed to get into the October 31st high at 210. Okay. Okay, what else do we have? Lam Research is a little bit older. Again, these things aren't blowing apart after earnings, but at the same time, very few of these things are pushing a little higher. Lam Research, kind of lighter volume going into earnings. This thing got back into a gap down that started with 2.7 million shares, got into it with 4 million shares, but still kind of rolling off to the side. This one is a little bit different in that the energy off this December 14th low never really came up to the energy down from the November 21st high down to the December 5th low. So again, especially some of these biotechs, you've had kind of a good run on it. I'm expecting kind of a little bit of a 50% retrace back in here. In this case, Lam Research might get right down into this big up candle of the 17th of January. That one, the high of the day on that one was 205 and the low was 193. So you get something like 198 on this, and you want to keep an eye on it for maybe another retest of the high, unless things have really turned sour by then. To Royal Caribbean, if you haven't got, if you don't have the runs, just wait and take one of these cruises. This did try to spike through the previous high of November 7th, 133.75. spiked it to 134.76 today, but did not hold it. Volume's just 2.7 million shares to the 3.5 million shares. So not bad, but again, you know, up $5. If I was long this thing, would I have held it? Probably not. Abbott Labs, one of the biotechs, to be up a little bit. And I got an email here. Yeah, I had something in the biotech sector that I sold yesterday in the Tech Insider for the first 100% winner of the year. Do I have that? Well, yes. So there's me honking my own horn. We'll talk more about that with Tom O'Brien, 3:30 on Friday. But I had the first equity move of 100%. I haven't had that thing very long. I've got some more positions out there that are doing fairly good also in the Tech Insider. So we'll keep an eye on that. We looked at Abbott Labs. You know, you have a gap. This is one fairly decent volume, but again, these things are kind of ending the move in their expansions. Take a look at this one. Let's go to this one out here and take a look. You know, if you go to, that's to the other one. Let's go to this, to Mr. A. Let's go to this one, to Mr. B. This one go to Mr. C. You didn't get much of a retrace on this move, but you certainly got it. Well, right up to 62.24 is the one-to-one on Abbott Labs. You're got up to 61.93 already today. You didn't get much of a retrace, 35% retrace from that October 23rd high back down to the November 1st low. Energy was pretty good, but man, what you did is come right back to this gap up that had a lot of volume, gapped up on almost 15 million shares. You came back into it 11 million shares on November 1st, and that moved it. But man, you are up here standing fairly tall on the top of a mountain where the air is getting kind of thin. That's why I think maybe some of these things have a little bit room to move back. For the loser of the day, we're going to try to fly the friendly skies. What did we have? Yes, we had wimpy earnings in United Continental. This one right back down to the $70 level where this thing gapped up. On 9.3 million shares, we're already down with 22 million shares. And kind of hard to see how expensive fuel, rising fuel prices, was going to do anything but kind of put a hitch in the get along of these guys, fly blue skies, down on heavy volume. Got another gap down here about 5. Looks like it even hit that if crude continues to march higher. Back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Question in the den: do I see Carnival and Royal Caribbean on Caribbean topping? And you know, when you get cold winters, everybody tends to go on cruises to get somewhere that's warm. And kind of had an off year last year, but man, I don't know. If you put this thing next to a contract of natural gas, I think maybe it would be kind of interesting to see just how these things go. But, you know, once you get to about February or March, this thing has a bad history in the past, or this sector has a bad history of selling off all the way from March pretty much until September, because, of course, people not doing much in the way of escaping cold weather. But this is kind of the number one way of getting out of it. And their earnings almost always decline all the way through, almost through December. But a lot of people start leading it and buying them going up into September. You can see this thing in, what was this, September of 2016, finally found its low. And that's not uncommon. You get a couple of cold years, things hold up, then the whole thing falls apart when you don't get a cold year again. The next year is normally a disaster. People don't think about it, especially if it doesn't get cold early enough. But my guess is if you went back and did a test of the temperatures and these things, you would find out that there is a massive correlation between the two. And my guess is that we've had a couple of years where these people have done it. My guess is they're probably going to be looking for maybe going to Disneyland or somewhere else next year, because these things, basically, they got 4,500 people on a ship. Man, it's just, after a couple of years, just not any fun anymore, at least in my opinion. I think that people will look for things elsewhere next year after this year. So maybe you got another month or two in the run in these. But my guess is that you probably get to March and see these sell off all the way to next September. At least that's the way I think this is setting up at the moment. Okay, let's go back to some of the other stocks that have come out. Biotech's PBYI. Look at this. This one, of course, fell off the edge of the earth today, back down to support where it last gapped up, and that was on May 24th of 2017. Gapped up on 11.9 million shares, down so far on 6.6 million shares. And, of course, when you're in one of these stocks that's an all-or-nothing cancer stock, you either get approved or you don't get approved. and these guys didn't get approved. And that's the end of that story. There's not a lot. That's very binary outcomes in these. I don't tend to like to be in these stocks when you know that there's some kind of big trial going on, because it is a flip of a coin. I'd much rather wait until the news is out on some of these and then start trading them again. So I think, you've got two big gap downs in this. I would look for the third one to start sniffing around Puma again. But you got one big gap, you got the second big gap. My guess is you're going to get a third big gap down here, and that may take you all the way back down into the $40 range. We'll see how this thing develops, but things kind of happen in threes, especially in biotechs, and I would wait for the last shoe to drop, but you might find something fairly good down in that $40 range. We will have to see. General Electric, not a whole lot new to say about there. When the first news broke, I said General Electric will probably not be around as a going concern through September. And it's the old cockroach theory. You see one cockroach, there's a ton more. Well, we're hearing more and more of it. SEC investigation. Wouldn't be surprised to see Mr. Imelt face some legal jeopardy, as lawyers like to say. Although I don't think you have as much fun as you have on actual jeopardy, even if you have to ask things in the form of a question. Don't think Mr. Imelt will be doing that in court. But, if you want to talk about Atlas Shrugged, I think GE is the perfect archetype if you want to go back there and look at a company that did everything that the government wanted, and it all turned to dust. And that kind of pretty much went on from about 2005 on, maybe 2004 on. And you end up with nothing at the end, but kind of an Atlas Shrugged market moment, at least to me. Chasing government, but not profits was always the problem. Okay, what else do we have out here? Anything moving? We got to that one, got to that one, got to that one. Do we have anything else? ABT, GE. This one was an interesting one. I hadn't followed it that much. It certainly had a nice pop out here. Cirrus Corporation. I want to get to the news here on this one because I found it very interesting. So we'll go to that here just a second. Let me get it popped up. Let's go back to the summary. Yeah. The profile. Oh, yep. I remember everything about this. I read it this morning. Sometimes I have to just do it. If you've ever seen the winos hanging around most big cities, there's always a place to donate plasma. And of course, with people doing intravenous drugs today and other things, questionable about the quality of the plasma you're going to get from these folks. Well, this company has a big solution for solving that and filtering out all the bad things that the local crackheads going in for the $25 to donate plasma will give you. A lot of the stuff is used for, especially a lot of, women that have birth need additional plasma, and this is pushed a great deal. Any kind of, problem, hepatitis, other things that people can translate and transmit through this is a big deal. They apparently are talking about a big solution to this in the filtering part. I thought it was rather amazing. Certainly the pop in price is amazing, so looking fairly good. I don't know what they're talking about here. Okay, so that was kind of an interesting one. I'm going to keep a much bigger or longer look at that. One of the problems maybe with this company is there's a bunch of other companies also coming out with synthetic plasma. And I don't know how close that is to getting approved. But of course, with synthetic plasma, as long as they make it right, probably zero chance of getting a bunch of horrible diseases from people willing to sell their plasma for 25 bucks. Anyway, we'll be back in a minute or two. We'll wrap up the show. We'll look at it. But again, we're back up 3 points in the S&P dash. Hard to keep a market down. Maybe this is it. I think maybe we get a little bit more before we go on the roller coaster ride starting next Monday into fund buying. We'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
A couple of questions coming in, kind of all the same. What do I suspect the reason why we start really moving up come Monday? And kind of hit on a little bit of it, but fund buying's part of it. We got the State of the Union, and I went through it with the Basel. Was it yesterday? The day before? I think it was yesterday. The leak of the new mass spending bill on infrastructure. So I already know that, or we do know that. The outline for handling immigration reform is Monday. My guess is that Tuesday night he unveils the massive infrastructure spending bill. We don't have any money on that. We also have Caterpillar coming out with earnings. Probably not good, but kind of hard to think that we're going to have a lot of infrastructure spending and see CAT go lower. But we'll see. But we got a few of these things kind of all converging, but fund buying, infrastructure spending, the 10th, of course, I've been bringing up this a lot of time. We've got the first paychecks coming out where people are going to, on average, get more, $100 more a month in withholding. So it's kind of tough to really have this kind of bearish mentality. Everybody kind of thinks something's going to go wrong. Maybe something does happen. Maybe Rocket Man decides to shoot something off. But yeah, it's for me, the hits just keep coming in. I was just looking for some sector rotation going into this weekend and them buying and probably seeing some kind of high, maybe in CAT Wednesday or Thursday next week into fund buying. Other infrastructure things, you got to figure that the permanent sucker class, as Judge Livermore used to call them, have to get in at the highs, and probably no better highs than a huge spending bill to pop a few of those. So looking like Wednesday, Thursday, you might see everybody piling into those. But yeah, we'll see. In the meantime, sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.